Hello traders, Gary Wagner with the Gold Forecast coming to you here from Honolulu, Hawaii. It is Sunday, it's approximately 1 o'clock and gold has been trading actively for approximately 1 hour. Quiet trading currently down about $2 at 1267.40. If you recall, traders, we talked Friday about the potential today for the market to come lower. In fact, we saw this back on Thursday. If you recall, we simply used what I call a Andrews pitchfork, and I drew this the pitchfork from the two lows. This is the bottom of the correction back in 2009. That's at low at about 1045. That was my first data point. Second data point that I used was the bottom of our last correction when the market hit around 1150. And then the third data point, of course, was at 1265. That was the top. As you can see, when I do that, and we then go ahead and take a look at where the upper level band is right in here, traders, you can see that I felt that there was a good potential for us to find resistance in that area. We actually went ahead, if you recall, we got out of our long positions right around this area, and now we're moving into the next week. Well, do I think that this market's going to continue down? Personally, it's a little bit too early to tell. Let me go ahead and blow this up for us. As you can see, traders, we do have the beginning of what I'll call a continuation. And what we would need to see for this continuation, of course, is this black candle right in here to have that lower low, something like that. And that would really indicate to us that this 1-2 day pattern, this dark cloud cover that we saw back on Friday's trading activity, did in fact signal a tentative top to the market. Now, where would I look for the market to go? Well, there's a couple of things that we talked about last week and we'll talk about in a little bit, but if we use Fibonacci retracement, we have two places at 23% and 38% in terms of retracement. We also, when we look at this Andrews pitchfork, this is the bottom area that I would look at, and I personally don't think that it would actually go this low, but that would be around 1320. So traders, as you can see, I expect quiet activity right now. Currently only trading down about $1. Not too much of a range, 65 on the low and 71 on the high. But the one thing that we want to do is see if we get any kind of buying or carry through selling as the market moves across the globe. It's currently in Australia. Of course, it will move to Asia, then to London, and then, of course, in the morning to New York. We want to see, most importantly, if the market wants to follow through. Now, if you notice, the last couple of times we've had any kind of retracement, this one large day, this is when we hit our record high back last week or so, and we had that high of 1365. It came down. You notice this was that $45 day. However, on the following day, the market really recouped all of the gains right in here and then began to move up. There haven't been that many opportunities to what I call buy the dip, because we haven't literally had that many dips. So what we're looking at really is, are we going to see any kind of follow through or carry through? Because without this follow through or carry through right in this candle here, my sentiment is this market's just going to pick up, move, and head towards $1,400 in a slow, methodical way. If in fact we do see the market come down a little bit, then what we really need to do is to look at targets or areas where it might go. And for that, of course, we've been following Fibonacci retracement. I'll go ahead and put that up for us on the board. This is just from the beginning of the wave 3 to the top. And let me go ahead and darken that for us. Hold on, traders. So as you can see, I've added our basic Fibonacci retracement areas, and realize that unless we actually see the market go into that confirming mode, I'm not really looking for a retracement here. But if we see this market, these candles here, start to sell lower, my anticipation would be there's two targets I would look for. The first, of course, is that 23% level. That takes us to 1350. And I don't think we would see much more of a shallow or a much deeper retracement. I'm looking for a shallow retracement. But if it went 38%, it could go as low as 1328 before beginning that final fifth wave up to end this impulse phase. As I said, it's fairly quiet this morning. We'll have to see what develops within this candle. If we see a continuation of this downward retracement, these are my targets that I'm looking for. Basically, 1350 is what I feel is doable or some sort of a potential. This has been Gary Wagner with the Gold Forecast, wishing you, as always, good trading, and we'll talk to you tomorrow on Monday. Bye-bye.